Today, everybody knows, these are for almost all of the resources, different resource metals and energy resources and so on. It's a tough time, but and some are performing well. But I, of course, will talk to you about silver, and I'll talk to you about what I see as the roadmap for silver going forward. Ultimately, I think there's going to be a huge move coming in silver. I'm going to talk about the macro, short and medium term outlooks, a way that I came up with to understand maybe the silver market in a simplified way, things that are driving the silver market, and ultimately the opportunity ahead. So, high level inflation. The chart on the left is the CPI, which is the numbers that we hear every day. These are US numbers. The CPI actually bottomed at 3 in June, went to 3.2 in July, and 3.7 in August. That's not the direction that the Fed wants. The chart on the right is PCE, so the personal consumption expenditures, and that's what the Fed says is their preferred measure for inflation. Also not going in the direction that they want. That bottomed just above 4 and has started to tick up again. And if you look at both of these, they're both around 4%. That's double what the Fed would like of their target of 2%. So hard times for them and everybody else. Well, some of the consequences, bank failures in this year, there were 4 banks that failed in the US, $550 billion of assets. The last time we had anything close to that was 2008, 2009. You had 165 banks failed and still lost less than the $550 billion. So part of that is concentration in those banks. Part of that is just higher assets under management. In the US, money market assets are now at an all-time high of almost $6 trillion. That certainly makes sense. When treasuries are paying 5%, people are not that interested in taking risk. They have some great alternatives. So that explains some of the challenges in the regular stock market, explains challenges in the resource markets. This also is a challenge for banks because they can't pay the kinds of rates that treasuries pay, so they can't attract money. So it certainly makes their lives more difficult, and I think that it's going to continue to make their lives increasingly difficult. You have interest payments on US debt, the federal debt, at an all-time high now, nearly $1 trillion per year. I think that although the Fed tries to stay apolitical, I think that it's going to suffer from increasing pressure politically to try and lower rates so that this becomes a little bit more bearable. The U.S. public debt just reached a dubious milestone of $33 trillion. And according to the Congressional Budget Office's own calculations, within 10 years, we're going to be at $50 trillion. That's an increase of $5.2 billion in the U.S. debt every single day for the next 10 years. And I actually think that last portion from 2022 to 2023, I think that the angle right up here is actually going to get steeper. I don't think it's going to take 10 years to reach 50 trillion. This is one of my favorite latest charts. What it does is it compares the price of silver to the Fed funds rate. So the orange line is the Fed funds rate. The gray line is the silver price. And that green dotted line is when the Fed started to dramatically increase rates, going back to early 2022. So it's interesting that, people are obviously complaining about precious metals lagging, not doing much, not performing, but silver is currently priced at almost exactly the same level as it was just before the Fed started to increase its rates, and dramatic increases. We're talking about the fastest rate hiking cycle in probably 100 years. So silver has managed to move sideways essentially for, let's say, about a year and a half, and these rates shot up. So it's actually maintained itself quite nicely through this period. So here's what I think, to summarize, is likely to happen overall. The Fed's probably going to hike once, maybe twice more. Recession is, I think, quite likely. Odds, I think, are pretty high. It's either recession and or something the Fed ends up breaking by hiking rates is going to take place over the next few quarters. That's going to cause central banks to pause and then ultimately start decreasing rates, cutting rates. And that's going to start to close the gap in real rates. And so as soon as you start seeing that, I think that will be the firing shot. You'll start to see precious metals especially start to take off. And then assuming we do get this recession, as we work our way through that and the market sees beyond recession, then we're going to start to see a lot of industrial demand start to come in for silver. And I think this is, over the next few quarters, likely to start helping silver move towards the $26 range and then ultimately nicely beyond that. So here's something I came up with to try to understand the silver market in a simplified way. You may have heard of something called the dollar milkshake theory. It was put forward by a guy by the name Brent Johnson, who runs a company called Santiago Capital Wealth Management. And the dollar milkshake theory is essentially a way to understand the world's assets, global assets. They're all in this glass. They're all mixed together. And one of the biggest dominating parts of the dollar milkshake theory is the US dollar and interest rates. So to kind of keep it simple in terms of explaining and as an analogy, what Brent Johnson is saying in his theory is that the straw in the milkshake is essentially, when the Fed starts to raise rates, it's essentially sucking liquidity out of the market. And so by raising rates, it makes life very difficult for emerging markets, companies in the rest of the world that issue debt in US dollars, because now to make payments, they have to start buying US dollars that have become more expensive. So ultimately, the influence of the US dollar, he feels, could actually grow over the next several years and become dominant. And he, to be fair, also thinks that gold and silver are still ultimately places to be. So as I say, a simplified way, I came up with this something called the silver latte theory, and it's a way to understand the silver market. So if you look at the bottom part, you've got the heated milk, which is, for me, the industrial demand, and that's going through some considerably rapid growth, but I think steady rapid growth. I think that industrial demand will help keep a rising floor under the silver price. Then you have the shot of espresso, which is the caffeine, and that represents investment demand and can be certainly volatile. It can come and go. And then ultimately at the top, you have the froth. And that's the fear of missing out, or FOMO. And that's when silver becomes overbought. And we've seen this multiple times over the last few decades, 1980, 2011, 2020, and then in early 2021 when we had the silver squeeze. So these things all come into play in the silver market. And hopefully it's a bit of an easier way to understand kind of how silver behaves and how things react. Now we're going to switch gears and talk about a little bit of the elephant in the room when it comes to silver, which is solar. So in 2013, solar was 1/6 of the investment in oil production. This year, it's actually neck and neck with oil production. So it has increased sixfold, really outpacing almost any other investment in energy. So really solar is really starting to take over. And that shows, this is a little bit more difficult to see, but if you look inside that circle, the yellow line is solar, and it is predicted by the International Energy Agency that by 2027, solar will become the top power source worldwide, surpassing both natural gas and coal. So that's really some incredible growth expected in the solar industry. Globally, manufacturing capacity for silver has been growing very rapidly. It's dominated by China, about 80% of global capacity. But if you look at 2021 to 22, 55% growth. 2022 to 2023, 55% growth. This year, the forecast is for about 28%, but yet through, I think it's July, already we're at 18.5% growth in manufacturing capacity. So I think we're going to even surpass the 28% for this year. I wouldn't count the US out when it comes to solar and solar manufacturing capacity, especially because of the Inflation Reduction Act. So consultancy called Rystad Energy did some research on this, and they think that the Inflation Reduction Act is going to put the U.S. on track to become one of the most cost-effective locations globally to harness utility-scale renewable energy. And that's because of things like the investment tax credits, the production tax credits. This is going to help to significantly reduce the cost to bring on these big renewable energy projects. And in fact, and this is from a different source, but it's expected over the next 5 years that solar manufacturing capacity in the US alone is going to grow at 48% per year. So really, the driver in silver industrially is very likely to be solar. So this you may have seen before, but it's certainly worth reviewing. 2013, 50 million ounces of silver went to solar. 2021, 110 million ounces. Last year, it jumped to 140. The Metals Focus that does the research for Silver Institute is forecasting 161 million ounces for this year. As Chen has said prior, and I certainly agree, that's likely to be revised up considerably. My best guess is somewhere around maybe 180 million ounces this year. And the reason, partly at least, is the chart on the right, which shows the requirements for silver in these newer technologies in solar panels. So the two right bars, TopCon and HJT, take from 50 to 150% more silver per panel. And again, according to Rystad, new manufacturing capacity this year is likely to be 80% these two new technologies. So in fact, I had some email exchanges with them, and I asked them a couple of things, and one of the things that this guy Marius Backe, who's a solar supply chain research analyst at Rystad, said the only supply material that they're worried about going forward in solar panels is silver. And again, from Rystad, if you look at 2020, these two newer technologies that require more silver represented about 10% of manufacturing capacity. This year, they're going to represent already 35% of manufacturing capacity. And if you look at silver requirements in the overall energy transition, currently we're at about 5 kilotons of demand. And this is actually something done, it was a meta-analysis of something like 11 different research papers on different critical minerals for the energy transition. When they looked at all of these research papers, they came up with averages and medians for across these different papers. And the median for 2030 is that we're going to need twice as much silver as we currently do, and that by 2040, we're going to need 3 times as much silver as we currently already need. So it's just really becoming off the charts. And this is looking back a little bit. Demand from solar alone over the last 10 years is up 320%. Investment demand for silver is up 100% in just the last 5 years. And yet mine supply is flat. You go back 10 years, we're still not producing more silver from mining than we did 10 years ago. It's just incredible with this surging demand, both from investment and from industry. An interesting report from Australia New Zealand Bank said that they feel that by 2025, which is just 2 years away, industrial demand for silver, the solar portion of it, could represent as much as 53%. And that growth in mine production is so reliant on silver as a byproduct from other metals. 70% of silver comes from mining gold, copper, lead, and zinc. And so that's really a challenge for silver output. And they feel that we're entering a period of tightness in silver that even higher silver prices are unlikely to alleviate. This is no secret. We've heard this before. Mining capex is shrinking. And if you look out as much as nearly a decade, it's expected that less and less spending, just because it's not a popular or a well-seen industry overall. So that's going to be a challenge to just get more of pretty much most minerals out of the ground. And here's an interesting chart that I just came across. Production of silver in Mexico. Mexico is the world's largest silver producer, 170 million ounces a year. And they've just reported a year-over-year change. Their biggest drop in silver output, 19%. It's a four-year low in silver output from Mexico. So that's another source of concern. I think that a lot of that, or a good portion of that, is the Newmont, their mine, the Penasquito mine, is on strike. And that's something like 30 million ounces of silver a year. So that's really hurting as well. This is interesting as well. Institutions are buying into, especially this particular silver ETF. 5 years ago, 8% of the Sprott PSLV was institutionally owned. This year, it's already 18%, so it has more than doubled. And the interesting thing about this ETF is that you can take delivery. The minimums are high, it's something like $400,000 worth of metal, but that's not an issue for these institutional investors. So they're buying into an ETF where they know they can take delivery. That really becomes quite interesting. And ultimately, if you look over historically, silver has outperformed gold. These are the last 6 bull markets in silver. One exception, the 85 to 87 market, it did not, or pretty much matched the gains in gold. Each other time, it dramatically outperformed gold. And if you look at where we stand right now and you compare the gap between silver and gold, and you look back at the last big catch-up, which was in the 2009 to 2011 period. So this blue bar here shows the gap, or shows the drop in silver and then the absolute run-up where it actually dramatically outperformed gold. And I think we're going to see ultimately something similar happen, except that this time the gap is even considerably wider. So that certainly bodes well looking forward. In the 2000s, the silver bull actually saw silver up 1,100%. In the 1970s, silver was up 3,700%. So what's the game plan going forward? Well, obviously, like most of these markets, silver and silver equities are very, very oversold. But now's the time to do your research, take advantage of this lull. If you're going to get involved, as well as doing your research, scale slowly into new positions. Look for, these are my top filters, top tier management, projects that have scale and that have grade. You want favorable jurisdictions, you want favorable infrastructure, and ultimately be patient, because it will take patience, but it also has proven historically time and time again that it pays off. You can get a great overview of all of this. I published a book last year, The Great Silver Bull, and that helps you to understand the silver market, but also how to build a silver portfolio and ultimately when to sell. So I write a silver investment newsletter, the only silver-focused newsletter that I know of. And I co-author Evergreen Investing with my colleague Gwen Preston, which is all about the requirements of metals and other resources for the energy transition. You can follow me as well on Twitter and on LinkedIn. That is it for me.